Imagine acquiring a profitable rental property without ever having to show a lender your tax returns, W-2 South, or pay stubs. It sounds impossible, but for savvy real estate investors, this is the standard way to scale using a DSCR loan. DSCR stands for Debt Service Coverage Ratio, and unlike traditional mortgages that strictly scrutinize your personal income and employment history, this loan program focuses almost entirely on the cash flow of the property itself. Simply put, if the monthly rental income generated by the property covers the mortgage payment, you can get approved regardless of your personal debt-to-income ratio. This is a massive advantage for self-employed entrepreneurs and investors who want to scale their portfolios quickly without hitting the conventional loan limit of 10 properties. By separating your personal finances from your investment assets, you gain the freedom to buy more real estate with significantly less paperwork and fewer headaches. If you are ready to bypass the red tape and let your property's income qualify for you, visit the link in the description to discuss your scenario with our team, and make sure to subscribe for more insider mortgage strategies.